Most small business owners ask the wrong question about IULs. They ask, what does it cost? But in 2026, the real question is, what am I paying for and why? Because the biggest danger in an IUL isn't the fees, it's the design decisions that turn those fees into silent performance killers. Premium loads, cost of insurance, index structures, all invisible, unless someone actually tells you the truth. And today, I'm showing you something almost no agent will ever explain. The real cost of an IUL is not the fees, it's the wrong design. And once you see Dan's two scenarios, say $1,000 a month contributions, you'll never look at the IUL the same way again. If we haven't met before, my name is Robert Balgac. I'm the CEO and founder of Black Swan Insurance Group. And since 2017, we've protected over 20,000 families and earned 800 plus five-star Google reviews by doing something the industry almost never does: radical financial transparency. High earners don't want the hype. Entrepreneurs want structure, clarity, and math that respects their intelligence. And if at any point you want to see these numbers built using your situation, you can click on the link below and you can schedule a tax-free wealth strategy session with us. So let's meet Dan. Dan is a 44-year-old contractor from outside Denver, and he built his construction company from a beat-up F-150, a few tools, and grit. He works long days, gets home late, and kisses his two kids goodnight after they all do sleep. Megan, his wife, stays home with the kids, and she manages the world behind the scenes, so Dan can build the one in front of them. And like many entrepreneurs, Dan finally reached that point where he said, my business gives us income, but what's giving us security? His accountant said he was overpaying the IRS. He had no 401k, and market swings made him feel sick. So when an agent pitched an IUL to him 3 years ago, Dan jumped in, trusting the promise of tax-free retirement. But he unknowingly bought a minimally funded, high debt benefit IUL designed to look impressive and perform poorly. Policy wasn't bad. It just wasn't built for him. And when you see the side-by-side math, you'll understand exactly why. But first, I'm going to go over all the unseen costs and why they exist. Let's start with the cost everyone misunderstands: premium loads. Premium loads aren't bad design. They're simply the price of admission. Just like merchant fees, payroll software costs, licensing fees, or a front-loaded mutual fund. A premium load covers state taxes, carrier expenses, commissions, distribution costs. And in 2026, the modern IULs typically charge 3 to 7%. This is not good. This is not bad. This is just business math. Administrative fees. A few dollars per month barely moves the needle. Not a big issue. But this is what matters: cost of insurance, also known as COI. This is the silent engine of the policy. Think of COI is like heating a building. So if you heat a 300 square foot studio, it's going to be cheap and efficient. But if you heat a giant warehouse, it's going to be expensive. And a high debt benefit is like a big warehouse, and max funded IUL is like a studio. And Dan's old policy, that was a warehouse. His redesigned policy, a studio. So you're going to see in these numbers how by year 10, Dan's minimally funded IUL was losing nearly $2,000 per year to cost of insurance alone. That's before a single dollar of growth. And that's why understanding cost of insurance matters so much. Once you understand the cost of insurance, you understand why index rules feel tight in bad designs and generous in good ones. Caps, participation rates, and why bad design feels bad. Index crediting isn't magic. It's math. So cap rates in 2026 are usually between 9 and 11%. And caps are not a fee, they're a ceiling. So if the S&P 500 index does 20%, your credit is going to be up to that cap, 9 to 11%. Also, there's a term called participation rates. In 2026, those rates can be anywhere from 100% to 160%. So if you have a 140% participation rate on the 7% index return, that would give you 9.8% credit. But here's the truth. Design determines how these rules feel. A high debt benefit, minimally funded design cripples performance because cost of insurance is eating cash value from behind the scenes. A max funded design lets the cash value breathe and gives the index room to work. Because high earners don't fail to build wealth, they fail to build the right structures. Which brings us to Dan's two scenarios. The moment most entrepreneurs tell me, why didn't anyone show me this earlier? Two policies, same premium, same carrier, same assumptions, same person. The only difference is the design. Scenario A is a minimally funded IUL. Premium is $1,000 a month, $12,000 a year. The death benefit is $1.5 million. And accumulated value at year 20 is $145,000. This is the warehouse. Beautiful from the outside, expensive to maintain, and weak accumulation. Scenario B, max funded IUL. Still the same premium, $1,000 a month, $12,000 a year. The death benefit starts at $307,000. That's the studio, lean, efficient, and built for growth. And cost of insurance between $1.5 million and $307,000 is where you save that money, and all that saved money, it's going to go straight into the cash flow. So 20 years in, Dan puts the same $240,000 into both policies. One design gives him $145,000. The other gives him $428,000. Same work, same dollars, completely different futures. And that's the bold truth about IUL design. Costs don't kill IULs. Bad design does. The bottom line is your business creates income, and your IUL, when designed properly, creates freedom. And imagine opening your policy 20 years from now and knowing you engineered that out, not luck, not Wall Street, not the IRS, you. Because real wealth comes down to three things: clarity, control, and design. So if you want a structure that uses IRS Section 7702 to your advantage, protects you with a 0% floor, and builds liquidity through policy loans, and creates a lasting legacy for your spouse and kids, then it starts with the right blueprint. So you can click on the link below, book your tax-free wealth strategy session with us, and we will build both scenarios for you, the warehouse and the studio, so you can see your truth in your life. And remember, it's not what you earn, it's what you keep. Enjoy the ride.